everything is so expensive. Yes, inflation's at a record 8.5%, but we're not the only ones dealing with this. Every one of the G20 countries is in the same boat as the US, and some are in way worse shape. So let's look at those countries, shall we? Now, before I tell you the actual numbers, understand that every country measures its inflation differently. So these might not be necessarily apples to apples comparisons, but regardless, these numbers are important to see. First up, inflation for countries on par with the United States. The UK, Mexico, Italy, India, Germany, France, Canada, Spain, the Netherlands, South Africa, Singapore, South Korea, and the Eurozone. Countries with inflation worse than the United States: Argentina, Brazil, Russia, and Turkey. In better shape than the US, but still elevated inflation: China, Indonesia, Switzerland, Japan, and Saudi Arabia. Now, I'm sure you're wondering, why is this happening? Of course, monetary policies play a role in inflation. Those policies determine how much money is circulated in the economy. And when there's too much of it, like right now, inflation goes up. In this country, that decision is made by the Federal Reserve, which is the U.S. central bank, and technically not under the control of the federal government. And its decisions do not have to be approved by the president or Congress. What experts say is the majority cause of this worldwide inflation. They say it's the result of the world emerging from a global pandemic, demand being really strong, but the supply chain not being able to keep up for this prolonged period of time. Plus, though it is certainly not the original cause of inflation, this Russian war in Ukraine is not helping matters because it continues to disrupt the flow of so many commodities, including food and energy. Don't shoot the messenger, but it's going to be more expensive for you to buy a house. As of this week, mortgage rates are now averaging 5%, which is the first time they've been that high in more than a decade. According to a new report from Freddie Mac, the 30-year fixed-rate mortgage is the most popular home loan, and just 4 weeks ago, it was at 4.16%. For reference, in May of 2021, it was 2.96%. So what is happening? Well, we've been seeing more people wanting to buy a home. Demand is up. Inventory, though, remains low and limited in lots of cases. Prices continue to increase, and of course, we're dealing with record high inflation. So what happened in the last 4 weeks to increase this mortgage rate? Well, remember when I posted this video? Yeah, 4 weeks ago. That's when the Fed increased the interest rate by only 0.25%. And at the time, I said this: for a time, unfortunately, we may see high prices, high interest, and high inflation. And that's what we're starting to see now. Since March, the Fed has indicated it's going to get more aggressive in increasing interest rates. In fact, the Fed says it's going to increase it by a larger margin and multiple times this year. The conservative increase that the Fed made in March, which was just that 0.25 percentage point, hasn't done anything to cool down this economy. So now the Fed says it could increase the rate by 0.5% or more in May. Traditionally, the Fed's interest rate tools rest on the assumption that higher rates will cool demand and pull money out of economic circulation, which in turn brings down inflation.